Hello everyone, my name is Farhan. Today you will solve question number 7 from 2014 past exam. In this question, you will record the balance day adjustments for two businesses. You will also prepare the ledger account for the prepaid advertising expense. So let's begin. Mark Petroleum is an Australian oil company. In 2014, it agreed to run a television advertising campaign during the upcoming cricket season. The business will provide a new car to one lucky viewer at each of the 5 one-day cricket games that will be telecast live in Melbourne. So we have this company called Mark Petroleum, and this company wants to run an advertising campaign for 5 cricket games. And in each of these 5 cricket games, this company wants to give away one car. So altogether, a total of 5 cars. Now, on 5th of October 2014, Mark Petroleum paid MGH Motors $330,000, including GST, for 5 identical sports cars. One car is to be delivered by MGH and awarded to the lucky viewer during the telecast on the game on each of the following dates. So we have got the games happening on 17th of October, 24th of October, 7 November, 14 November, and 6 December. So both Mark Petroleum and MGH Motors report on a monthly basis. So the first requirement of the question is to prepare the journal entry that records the balance day adjustment on 31 October 2014 for Mark Petroleum. So let's look into the workings on the right-hand side. So Mark paid a total of $330,000, including GST. And this $330,000, including GST, was paid for 5 cars. So let's calculate the GST excluding cost. So we take the GST including cost of $330,000 and divide with 1.1. The reason we are dividing with 1.1 is because 1.1 can be written as 1 plus 10%, and 10% is the GST rate that is applicable in Australia. So the total cost excluding GST is $300,000. So once you know the total cost excluding GST, you can find the GST that we are paying, and that is going to be $30,000, which is the difference between $330,000 and $300,000. Now, within the GST clearing ledger account, we have got the debit side and the credit side. So where do you think this GST paid of $30,000 need to be included? If you guessed the debit side, that is correct. Because when we pay GST, this is used to reduce our obligation that we have with the ATO for the GST that we collect from our customers. So GST paid recorded on the debit side of the GST clearing account simply refers to the reduction in the obligation or liability that we have with the ATO. So GST clearing account, generally in most cases you will see, is a liability account where you expect the business to collect more GST than it has paid, right? So this GST paid of $30,000 would be recorded on the debit side of the GST clearing account, which simply refers to the reduction in liability that we have with the ATO. So the journal entry. So what about the journal entry on the 5th of October 2014 when Mark Petroleum paid MGH Motors $330,000 for 5 cars using funds in the bank account or for cash? So we understand that the payment on 5th October, if we were to do the journal entry on 5th October, we would debit the prepaid advertising expense. The reason we're debiting the prepaid advertising expense because at this point in time, which is the 5th of October, the prepaid advertising expense is a current asset. Altogether, $300,000 with the GST recorded separately as $30,000. And as you can see, we are debiting GST clearing because this is reducing our obligation with the ATO, which in fact is reducing our overall liability. Now, then we are crediting bank by $330,000 to show that we have used $330,000 from our business bank account to pay for advertising, including GST of $330,000. Now, on the 5th of October, as we understand, we are recording a prepaid advertising expense because this is a current asset. Now, what about the cost price per car, excluding GST, which is going to be $300,000 divided by 5 cars, and that is $60,000 for 1 car. Now let's look into the balance day adjustments at the end of the reporting period on 31 October 2014, given that we understand that both businesses report on a monthly basis. So on the 31st of October, if we were to do the journal entry, we understand that 2 games would have already happened. And those 2 games are the games happening on the date of 17 October and the games happening on the date of 24 October. So these 2 games will mean that 2 cars have been given away. And given that the cost of 1 car is $60,000, the total cost of 2 cars for 2 games is going to be $60,000 multiplied by 2, which is $120,000. So when you do the balance day adjustments at 31 October 2014, you know that you have consumed the economic benefit, a part of the economic benefit that you originally paid for in terms of the prepaid advertising expense on 5th of October, which was worth $300,000. So now that you have consumed the economic benefit of $120,000, we can say that an expense has been incurred. And when expenses are incurred, we debit them. So that is why we are recording debit advertising expense as $120,000. Okay? We are crediting prepaid advertising expense by $120,000 because this means that we are reducing the current asset that we originally recorded on 5th of October for prepaid advertising by debiting it at that point in time by $300,000. So now that we are adjusting for the expenses that we have incurred or consumed on the 31st of October, we are crediting the prepaid advertising expense, which is the current asset of the business, by $120,000, which simply means that the current asset balance for prepaid advertising expense is going down. Okay, so let's look into the journal entries. I mean, on the left-hand side, so you can see that we have been given the option to record either in the general ledger or the subsidiary ledger. So what is the difference between the general ledger and the subsidiary ledger? So the general ledger records any transactions relevant to assets, equity, which is also known as capital, liabilities, income, and expenses. But if you think about the subsidiary ledger only has detailed individual records for credit suppliers and credit customers. So what do I mean by that? All right, so I'll just take you to the last page. Okay, that's here. Now, so when you think of assets, for example, the accounts receivable, which is an asset as a general category, we are going to record the total of all accounts receivable transactions, all the sales that we make with this accounts receivable within the general ledger, right? So accounts receivable are going to be reported as a whole within the general ledger. So this is basically going to be a summary of all the transactions that we have done with all the accounts receivable of the business. But if you were to look into the subsidiary ledger, you could have, let's say, 3 customers, customer A, customer B, and customer C. So as you can see the distinction, in the general ledger, we have the total of everything that's going on with all the credit customers or all the accounts receivable. But within the subsidiary ledger, you can see that we have 3 different credit customer accounts, customer A, customer B, and customer C. And each of these 3 accounts will have detailed track records of all the transactions that goes on with each of these customers, right? Now, the same thing can also be applied to accounts payable. So within the general ledger, we are going to record the liability, the total of everything, all transactions that we do with the accounts payable, who are the credit suppliers of the business. But when you look into the subsidiary ledger, you would have accounts for supplier A, supplier B, and supplier C. All right. So I believe that clears any doubt that you may have with general ledger and subsidiary ledger. Now, the balance day adjustment that we have done for Marv Petroleum on the 31st of October, we do not have any accounts receivable, nor we have any accounts payable. So the question of recording this within a subsidiary ledger is not really important in this case. So you can just simply record this within the general ledger, which records this expense and the reduction in the current asset. So on the 31st of October, we are going to record debit advertising expense. So I'm just going to write ADV, EXP in short. Make sure to write the full thing in the exam. and that's $120,000. And then you're going to credit prepaid advertising expense, which is the reduction in current asset balance, and that is $120,000 recorded on the credit side of the general ledger account column, within the general ledger column. All right? Okay. So now that we are done with Mark Petroleum, let's look into the second requirement of the question. So part B wants you to do the journal entry to do the balance day adjustments for MGH Motors. All right. So MGH Motors. So now we are taking a different perspective. So let's see what's going on. So if we were to record what happened on the first day of transaction, which is the 5th of October 2014, given that the perspective is MGH Motors, MGH Motors are receiving cash of $330,000 into their bank account. So as a result, the bank balance is going up, which reflects an increase in assets. And when assets increase, we debit them, which is what you can see in this case. Then we are crediting unearned sales revenue, and the amount is $300,000, with GST clearing being credited by $30,000. So what's the logic here? Now, from the perspective of MGH Motors, they have just made a sale with a customer. So MGH Motors is in charge of delivering the 5 cars. Okay. So the reason this is an unearned sales revenue on 5th of October is because none of the games had taken place yet. So this is a current liability for the business. And unearned sales revenue simply means that you have collected the cash in advance, but you are yet to deliver the service or the product. Okay, so we are crediting unearned sales revenue by $300,000 because the current liabilities of the business is going up. Then we are crediting GST clearing by $30,000 because from the perspective of MGH Motors, as we have mentioned, they have made a sale with the customer. And this is GST collections. So GST collections increases the liability or the obligation that MGH Motors is going to have with the ATO. So that is why within the GST clearing ledger account, you have to show this on the credit side, which reflects that increase in the current liability. So that is why GST clearing is credited by $30,000, as you can see here. Now, what's happening on the 31st of October? So as we know, 2 games would have already happened, and those 2 games would be on the 17th of October and 24th of October. Okay. So when we do the balance day adjustments on 31st of October, $120,000 worth of service or products would have already been delivered by MGH Motors, which means we could now recognize a portion of the originally recorded unearned sales revenue on 5th of October now as earned, like we have actually deserved. We actually deserve to earn this revenue, right? So what we have to do is first reduce the liability in the books, and that is to debit unearned sales revenue by $120,000, because this is the service that we have fulfilled. Our obligation has been fulfilled, so we can confidently say that now we have income, we have earned sales revenue of $120,000. So debit unearned sales revenue by $120,000 reflects the reduction in the liabilities, and credit sales revenue by $120,000 simply means that your revenues are going up, and this is to be now used as part of your profit calculation to determine an accurate profit figure, and also that is under the accrual basis assumption. Okay, so let's see what's going on for the working space that we are given. So for MGH Motors, so again, we have no accounts payable, no accounts receivable involved in this balance day adjustment that we are doing. So therefore, we do not have to record anything within the subsidiary ledger columns. So just simply record this within the general ledger column. So we debit unearned sales revenue by $120,000, which again means to reduce the liabilities of the business. And then we credit sales revenue by $120,000, which simply means that we have earned some revenues, and these revenues are now to be used as part of the profit calculation. Okay. All right. So let's see what's next. So prepaid the advertising expense ledger account for Mark Petroleum at 31 October 2014. You're not required to balance the account. So it's pretty straightforward. Now, prepaid advertising expense is a current asset account. So the reason we call this a current asset account because they are clearly mentioning prepaid here. So all assets by default should have an opening balance on the debit side. Now, in this case, we have prepaid advertising of $300,000, excluding GST, on the 5th of October. Be careful that this is being done from the perspective of Marv Petroleum. So from the perspective of Marv Petroleum, in their prepaid advertising expense account, they're going to record the payment made for prepaid advertising on the 5th of October, and that is $300,000, right? And the reason this is on the debit side is because this simply means that the asset was going up on the 5th of October. Now, by the 31st of October, Marv Petroleum consumed $120,000 worth of benefit that comes with the prepaid advertising, and now we can confidently say that this is an advertising expense that has been consumed or incurred. And this $120,000 is the total for 2 cars that have been delivered on 17 October and 24 October. So you could just simply stop without showing the closing balance and you will still get full marks. But if you were to show the closing balance, that would be $180,000 to make sure that we have $300,000 on both sides. Okay. Now I have a question for you. So all these entries that you see on the credit side of the prepaid advertising expense ledger account, how much are we going to show in the income statement and how much are we going to show on the balance sheet? Now, for the month of October, in the income statement, we are going to show advertising expense incurred of $120,000 for the 2 cricket games that have happened and the 2 cars that were delivered. And in the balance sheet, at 31st of October, the closing balance would be $180,000. So within the current assets section, if you include the prepaid advertising expense, you're going to show a balance of $180,000. Okay? So that's all for today's lesson. Make sure to like this video and subscribe to this channel and check the link in the description to book your tutoring call and discuss your requirements. I'll see you in the next video.